Good morning, good afternoon, good evening. Welcome to our moderated discussion on tooling up for a future of embedded finance, part of the Embedded Finance North America sessions. We are very pleased to welcome you here today. And my name is Matthew Kelly. I am head of digital and automation for Northern Trust Asset Management, a $1.2 trillion asset manager where I'm responsible for machine learning, robotic process automation, as well as a number of cloud technologies. And I am very excited to introduce to you our great panel. During this discussion, we will analyze the latest technologies behind the veil of banking, cloud, open architecture, APIs, automation for banking as a service. We'll explore how utilizing APIs in banking will enable a collaborative approach between fintechs and financial institutions, and also talk about personalizing product offerings through big data. So we'll see if we have time to cover all of that today. But I want to introduce Daniel David from Wells Fargo. Over to you, Daniel.
Thanks, Matthew. My name is Daniel David. I'm the head of APIs, payment APIs at Wells Fargo. And so we've been, this is a new channel. It's now 5 years old. And we've really grown dramatically in those 5 years to be serving many billions of calls now per year. And it's just a really exciting place to be, where we're able to really externalize our services and all of our payment options, where we can partner with third parties, we can offer them to our wholesale customers and really expand our offering. So it's great to be here.
Thank you, Daniel. We also have Sohaib. Sohaib, I'd love to hear about you, your organization, and embedded finance, what it means to you guys.
Thank you so much for the intro. Hi, my name is Sohaib, and I'm the co-founder and CEO at Railz. We are a little over a year and a half old company, building APIs to pull accounting data out of the accounting systems of small and medium enterprises for banks and financial institutions to build new and enhanced and better services on top. Over the course of a year and a half, we have grown substantially, raised seed and Series A, and now on track to helping our financial institutions digitize a lot of their SME side of services. And I'm excited to be here and talk about embedded finance.
Thank you. Also, we have Jayson from Seattle Bank. Jayson, would you mind introducing yourself?
Sure thing. Yeah, Jayson Callies, Seattle Bank. I'm currently the EVP and Chief Innovation and Information Officer. We're really driving hard down the API path, and we definitely believe fintech partnerships are kind of the way of the future. So, very excited to be on the panel today.
Thank you. And we also have Amy, who's joined us. Amy, would you mind introducing yourself and telling us a little bit about what embedded finance means to you and your organization?
Sure. So my name's Amy Iceman. I am the AVP of Research and Digital Experience at MSU Federal Credit Union. I am 1/3 of our innovation team, which has been a really exciting process for us to build. We're really committed to creating memorable and lasting experiences for our members. And in doing so, that has a big part to play with how we look at embedded finance and the opportunities that come in that space, on top of partnerships with fintechs and the ability to be agile and quick in adopting new opportunities and technologies. So I think collectively, our goal is to make sure that our members are having the most ideal experience and that we're staying on top of what their expectations are through research. So I am excited to be joining today and ready to dive in.
Thank you, Amy. So we've heard a lot this morning about what embedded finance is and the scale of the opportunity. I would love to hear some of your thoughts on why there's a sudden acceleration in interest and activity in this space.
So I think that embedded finance is really taking off for a couple of reasons. If you look at it from a couple of different angles, From the user's perspective, I would say there's a lot more trust and comfort in finance and related activities being done away from their financial institution and in different areas. And I think it's grown over the years to the point where it's very accepted and there's a lot less hesitancy. And then when you look at it on the other side, from the sort of like the supply side, you've got API providers, I guess like Wells Fargo would be one of them, and large financial institutions, business software are really driving the creation of these services and these APIs, these SDKs, making them available, looking at them as new channels, new ways of reaching users. And then the third piece would be all these integrations, these third parties that enable these easy integrations where maybe it used to be a lot more complicated to have these things in place. But now with APIs, with SDKs, with low code and no code, all these things are coming together to make it really easy. So you've got the supply side making it available, the third parties making integrations easy, and the users accepting of it. So you bring all that together and you really have this cool, I think, marketplace. And then the competition starts to heat up because when a third party starts to make these great integrations, you'll have a large financial institution like a Wells Fargo that says, well, wait a minute, we can do this too. We can also offer SDKs. We can also offer these integrations. And that just drives this healthy competition. And it's sort of like a virtuous cycle. And while the users see this and they see these more opportunities, I think they're more willing to authorize and share their data. And that's where I just think you see this exponential growth, where it started off with maybe a little bit of hesitancy, not enough supply, but now it's just, it's everywhere.
Thanks for that. I would like to hear your perspective, Sohaib, on the API side.
Yeah, so, well, at the end of the day, for us, embedded finance is really about enabling anybody who wants to build a financial services company on top of companies like Railz or Plaid, for example. Andreessen put it really well and said that every company is going to be a fintech company at the end of the day, whether to augment their current business model or to offer a brand new product line. And we have seen that different consumer companies coming into becoming financial offerings for their consumers. It just gives them a new cohort of consumers to go after. Their consumers a more confidence, in the brand to vertically do everything within that ecosystem. And enablers like Rails are actually making sure that data is safe, secure, and developers building on top are able to build new products. And we have seen that in the past with things like Apple Store and Google App Store. When you give new tools and better tools to developers, you see amazing products being built on top of it. So embedded finance at the end of the day is enabling builders to build better products than what historically has been offered by the big institutions.
Thank you for that. Jayson, I would love to get your perspective on the risk and opportunities and the changes in this space, and what does that mean for the CIO of a bank?
Yeah, we're seeing a lot of opportunities in the space, and I think a lot of it has to also do with APIs starting to be enabled across other basically commercial segments and verticals and outside of banking itself as well. So we're seeing things, like this morning, I think there was an announcement that Clear was partnering with one of the, restaurant reservation companies to provide, online vaccine cards so that they can, reserve and make sure that the person's been vaccinated, that kind of stuff. So we're seeing all kinds of developments out there and opportunities in the spaces, especially in the commercial side, where we have commercial clients that have, their own existing platform. They've built it, API first or whatever that looks like. And they're coming to us, wanting to put digital wallets in or embed finance into their platform in some other way. And I think there's just a huge opportunity right now in the marketplace for that. And kind of along those lines, I think the opportunities really down the road or become more of an orchestration type layer. I mean, you're going to see all kinds of companies out there pulling fintech, and payments, I think, is really one of the drivers of that. I think getting payments into the solution to provide a really good client experience where you can go end to end, including your payments and all the other pieces that go along with that. I think that's a big driver as well.
Thank you. As you were talking about the client experience, it kind of connected me to what Amy was sharing earlier. Amy, I would love your perspective on what does changes in APIs and embedded finance mean to the client experience?
Definitely. I think that's one of the biggest drivers from our perspective is meeting the expectations of our membership and what their control of their finances needs to look like on a personal level. And having access to different APIs and embedded opportunities gives them more control, but it's also an expectation they have now because of workflows like Amazon and all of these online shopping retailers. There's a certain level of experience that's expected. And so for us to meet them where they are and build on the trust they've built with us to support the way that they want to manage their finances or the way that they want to spend online is important for us to keep adapting and make sure we're meeting them where they are and that experience is relevant to them both in our platform and on others, and that when they come back to our platform to manage that spend or manage their finances in whatever way, we are providing them those additional tools and access points to do that in alignment with our organization. And so I really think it's more of it's a personalization factor, it's a control factor, but really it's the expectation of the way we live now and making sure our members feel like we're supporting them in that and that it's not a hurdle for them to use us, but rather that we're behind them in these and supporting their security and their finance management and their personal growth in all of those aspects. So the experience is really the driver. We are very heavily driven by students. We're a university affiliated credit union, and we've seen that switch has shifted for our students where they don't want to have to take a long time to make a purchase. They want to do it and move on. And then they want to come to our app and make sure they haven't been overcharged or double charged or that the return from Uber or Lyft has been made to their account. And so having the integrations for those to be real time and relevant to them has certainly been a priority for us on top of all of the other powerful tools that come with living in this world and how we want to adapt to it.
Wow. Thank you for that. I'm very curious to understand some of the enabling technologies underneath this, right? So we've talked about APIs quite a bit, but what are some of the other enabling technologies that are supporting that kind of client experience that you were talking about? I might want to go to Jayson first on this.
Yeah, I definitely think cloud adoption really kind of started this path. The ability for fintechs to really start, create the whole stack basically for low cost, very low cost compared to traditionally buying a bunch of servers, hardware, gear, putting it in a rack, all that kind of stuff. So the barrier to entry really got reduced with cloud, I think. And then based off the cloud adoption, then people started looking at some of the other models out there in the API first model. And I think that really enabled a lot of openness as well, a lot of easy connectivity and speed to market. That's a critical factor in all of these things is that, the API and cloud first mentality has also opened the door for speed to market. So you have a lot of really great new product offerings coming out that really, would have taken, years, but, those things are coming out now in months, months to a year versus many years in the past. So a lot of stuff going on as far as with the tech stack and acceleration, and a lot of that has to do, I think, with cloud, the initial cloud being adopted.
Thank you for that, Daniel. What are you seeing from your side?
So I would add to Jayson's answer. I think he's absolutely right about the cloud, and I would add a couple. I guess two things I would layer on. One is the security aspect. I think the adoption of things like OAuth 2, of digital certificates and TLS, I think that has enabled the passing of sensitive information, payment information, credentials, things like that, in a much more safe, secure way that gives API providers and retailers and so forth the comfort level to exchange that information and to not be too hesitant. And then the second part is the AI and ML, machine learning and AI that really is layered on top of these API foundation, the data that comes via the API, and then you add that layer of machine learning and AI to be able to really almost create these new business models. APIs sort of say, here's the data. Maybe you can access it where you couldn't otherwise. You had to go to your bank. You had to go somewhere. Now you can access it anywhere. But then you add this AI layer onto it, and it really adds this whole new angle of, here are some insights, here are some projections, here are some suggestions to help you that you may not have thought of, or that wasn't even possible, because now we have data from millions and billions of users and use cases and historical data. We can now say, this will help you, or this is something you might be interested in that we never could access before. So if you put all that together, plus the cloud adoption that Jayson was talking about, you really have this like amazing new opportunities that just couldn't exist without those things, not that long ago.
Yeah. Sohaib, I would appreciate your perspective as well on this.
I couldn't agree more with Jayson and Daniel on the points that they've raised. But I think there's one missing piece of the puzzle, and that's a mobile phone adoption. That's literally a bank branch in your pocket. Consumers wanted access to better services right there in their hands, and the smartphone enabled that. And then it drove everybody else to switch their architecture to the cloud, and the advent of APIs when Plaid and Yodlee came in gave you better access to data and what that data means and how new applications can be built on top. But I think underneath that layer is really the user experience, which drove this whole phenomena of embedded finance. Consumers just wanted a better experience in their hands, and everybody had to jump to make that happen.
Yeah, there seems to be a cycle between consumer technology adoption, right, and business technology adoption, and a cycle there, creating better experience for consumers. I'm wondering, Amy, you talked about university students as a certain kind of demographic. Are you seeing, just in your survey of the market, different levels of adoption in the younger segment versus your older segment? I would also like to talk about kind of adoption in the US versus other international markets, but I would like to start with the generational shift first.
Sure. So we have a membership of over 300,000 members. So although a good portion of those are students, there are a variety of faculty from the university as well as several other seg groups that are part of our credit union. And we have seen an increase of adoption across the board in terms of comfort level with just digital experiences as a whole. But with the pandemic at hand, we saw kind of a spike in what people were willing to try and what they were willing to access and share their information with, because it was simpler than what they had been doing before, or it was the only option than what they had been doing before. So we did see those types of things spike across all of our demographics. We had a pretty solid adoption rate for our digital technology anyway across our membership, but I think it was only enhanced as we started adapting to the market ourselves and making sure we had those integrations available for our members so that they could manage their finances the way they expected to. But B, and that their willingness to share that data and try new activities that maybe they hadn't been doing in terms of online shopping, or having those experiences built into their mobile devices, or accessing their bank account online and wanting to see their finances in a different way, or have those insights that are, we have a chat bot and have educational materials that are driven by AI, and we had a huge increase in adoption in those areas as well. So those are some of the things that we saw a greater adoption for, that I think were spurred by the pandemic, but also by people's appetite for wanting to try those things and see how they can make their lives better. Some of that fell off as things opened back up, but it has remained much more steady than we had seen before. And from an experience standpoint, I agree with everything that the gentlemen have said before me. Is not only are the tools available for my team at the credit union to be able to adapt and integrate those points for our membership, but our membership is expecting those to be available to them out in the market, and then be able to have that reported back to them. So that data share and those access points are important from both sides of that equation and for all generations. I think each generation has a different expectation of those use cases. I think Gen Z are a little bit more willing to explore and try and learn. I would agree in that same sentiment for millennials, where we're seeing some of the Gen Xers who still really want the simple button push, I want to make my purchase and move on. But that doesn't eliminate them from wanting those same insights and having those AI and ML opportunities on the back end of what that means for their finances. So there's a different level of appetite, but the willingness to explore has increased exponentially over the last year.
Wow, thank you for that. Daniel, Wells Fargo is a global bank. You talked about billions and billions of calls on your APIs. Are you seeing different levels of adoption or connectivity based on geography, and where do you see the growth happening?
Well, so primarily we are focused, in the United States, and so that's where our API customers are located. So geographically, it really depends on the service that we're offering. Account aggregation is our biggest use case in terms of the number of calls. That's also a little bit skewed because it's the type of thing that would be called frequently, as everybody's transactions change, on a daily basis. But we're seeing adoption in really interesting use cases that not always the most obvious ones. Sometimes it might be related to account open, whether it's a co-brand or a private label credit card, that where we have these customers really across various industries. And then, as you would imagine, on the payment side, everybody needs payments, and so while I wouldn't say geographically there's any difference, you might have customers that have monthly reconciliation and payments. Some customers, they will have lots and lots of small payments, or you might have aggregators who need to make literally millions of payments to their customers. So it's really across the board, and that's why it's exciting to see growth in some of these areas that they might not be exactly what you expect, but we just follow our customers, what they're telling us, what they're doing, and we're able to respond quickly, which is it's great because we have a broad array of services, so we're able to kind of pivot as necessary. And sometimes we have customers say, hey, you know what, we'd like an SDK because we want something more of a low code solution, and so we're able to do that sort of thing. So there's a lot of growth in a lot of areas is really the bottom line.
Wow. So, and this question is for you, Jayson. Who really has the most to gain, right? So is it the customer and their experience and how amazing it is, or is it the bank and being able to be more efficient and manage resources and capital better?
Yeah, I definitely think the consumer at the end of the day is going to benefit a lot from this. The banks are scrambling right now to figure out the business strategies on how we're going to move forward and provide all these services and still be able to make money on the bottom line, right? So there's a lot of spend that goes is involved with some of these strategies and that kind of stuff. So it's a balance for sure, but at the end of the day, the consumers are the ones that are going to win out for sure. The fintechs are spinning up every day. They're providing some really cool offerings and services, and it's just a matter of, like I say, orchestrating with fintechs and orchestrating with the partners and different vendors that you need to provide that end user experience for your specific client base or demographic that you're going after. So lots of opportunity out there, and I think it's opportunity on both sides.
Well, thank you. Amy, how would you answer that question? Who has the most to gain?
I would agree. I would agree with that statement that the consumer really has a lot to gain. I think more than ever, they're looking for different ways of approaching their finances and managing them. And these opportunities allow them to do that however they see fit or however they feel comfortable. I think the security comment that was made earlier also hit the nail on the head. I think there's a next level comfort that the security is there, and so they can take advantage of these opportunities more readily. I think we have a lot to gain as well, though, in terms of helping satisfy that appetite for our membership and giving them the best advice we can and making these integrations and support systems available through our systems. so that they have those access points that they're looking for, but still can build on the trust that we've built with them over the years, and knowing that we've got their back if one of these things isn't as expected. I also think there's a lot of great opportunity for growth for, SDKs and personalization options for credit unions and banks to customize some of these really cool fintech solutions to meet the needs of their membership base and meet those demographics where they are. It doesn't have to be a canned solution anymore. It can be a baseline that you build on top of, or it can be taking bits and pieces of different experiences to create something unique for your membership or your client base. And I think that's a really cool and empowering experience from the back end business side of things. But I would definitely say the consumers have a great advantage in being able to use these products and make it their own in how they want to approach their finances.
Well, thank you. So we've talked a lot about payments. Is payments the gateway to creating these new experiences for customers and growing into a more API-driven business model? Daniel.
In a word, probably, or yes. I think, payments are really interesting because if you think about it, 15 years ago, let's say, it was lots of folks were, really unsure about something as simple as typing in their credit card into an online, retailer. Like, do I really want to do this? And then fast forward a few years, and it became a lot more accepted. And then it became, maybe for, let's say, the top couple or two or three retailers, it was, are you okay with storing your payment information at this retailer? And then it started to become suddenly third-party wallets would show up and say, well, would you like to store not just your credit card, but your debit card, your bank account, and just everything? And little by little, I think people started to get more and more comfortable with that idea. And if you sort of marry that with the idea that payments were already being done, so a retailer already had a payment processor, they were already doing, conducting payments, and combine that with the fact that the concept of payments is really to reduce friction, right? Nobody really, it's that sort of necessary evil at the end of the experience of the product that you want. So the idea is, let's make it simple, let's make it reduce friction, let's make it invisible, was already there, and the retailers were already doing it. So it sort of seemed like it's a logical next step when you start to see digital wallets, and the fact that it's not that hard to embed or to integrate. If you compare it to some of the other solutions, maybe it's offering insurance or buy now, pay later, things like that, are probably, in some cases, a little bit more complicated than enabling payments that were already being done, just in a slightly different way, or storing a card on file. So I think from that perspective, it makes sense for that to be the first use case that really everything took off from. And I think if you combine that with the idea that customers have been over the years also getting really comfortable with payments being done in anywhere, using their watch, using a QR code, even just with credit cards, tap to pay versus swiping. I think it just opens up everybody's minds on the user side and on the retail side that says payments can and should be done whatever's the most convenient possible. And I think that kind of thinking started to get companies to say, well, okay, now that we've sort of tackled that, why don't we expand it? Why don't we sort of start to almost vertically integrate certain things? So if you're a car company, you might say, why don't I offer insurance? Or the whole lending solution. Hey, I have a big ticket item that's, why don't I start offering some sort of credit facility, whether it's buy now, pay later, or a short-term loan, and try to keep that customer within the confine, within the walls of my domain, and not send them off when I know that most of the time they're going to go get financing somewhere else. So I think it just kind of goes from there, where the comfort level on both sides, and then the tools are available. It just makes sense for the sky to be the limit. And it just goes from there. So in that sense, yes, I think payments really open the door for that to happen.
Thank you. So, hey, where does it go next? Right? Where does it go from payments, and how does the use case expand? And I'm thinking, about the SME market and some of the other things that you spoke about earlier.
So I can speak on behalf of different SME sides. I think we're heading towards financial OS now, and a lot of companies have started to tinker with that idea. Like Daniel talked about, early days, it was hard to store your credit card, or people didn't trust, and a couple of companies started doing it, and then came the tap and so on. The evolution happened. Now companies are going towards giving you complete OS to run your business, from payment side, from affiliation side, from accounting side, from cash management side. And new fintechs are actually enabling businesses to conduct a lot of their financial side of the business within the single platform. And right now it's happening out of fintechs offering these solutions like Brex or Ramp or Divi. We've seen Bill purchase Divi in a big acquisition, and there's a big push and move towards building that OS for the small, medium business, or even the commercial side of the business. So I think that's the next evolution to take a step in the SME world.
No. Thank you for that. Where do you see things evolving, Jayson, from your perspective?
I think, definitely on the banking side, we're in the early stages, of, I think, a wave of maybe consolidation in the next 3 to 5 years. So I think we're going to see that kind of ramp up a little bit here as the neos and challengers start to consolidate and the banks start to consolidate. As more and more like the payments become ubiquitous. So that becomes something that's kind of done outside of the banks. And I think you're going to see more and more get pulled away, from traditional financial institutions. We're slowly becoming utilities, but at the same point, we're utilities that are actually working with vendors to create new products and cool stuff, right? So I think the banks that can do that can really lean into, their demographic or their strategy or whatever that is. And if they can lean into that and they can partner with the fintechs they need to provide that experience that their end users are expecting, they're really going to come out of this on the backside really well. But the ones that, are not kicking the tires yet or are not paying attention, I think there's going to be some consolidation there in the industry. I think APIs in general, like I say, they're moving across verticals. You're seeing companies in all kinds of different spaces that are they're pushing their vendors for API first. So you're seeing integrations with payroll processors. You've got a whole bunch of different fintechs out there grabbing data from all other places. So I think there's going to be a lot more opportunities for those orchestration layer type fintechs and even just companies in general that can go out now and grab all of this great data that's being compiled and really start to use it for other things entirely. So the sky's the limit as far as I see right now. I mean, there's a lot going on, and there's a lot of opportunity.
Thank you. I guess kind of a final question to you, Amy. What is the mindset shift, the organizational change that needs to occur in financial institutions to really take advantage of these opportunities?
Sure. I think that's a great question. And I think there's several layers, and it's probably different for each institution and how they want to pursue these changes. But I think the biggest shift that needs to take place is really just in education, right? So, there's been a lot of discussion of the layers that have happened to make these things accessible and the expectations that our members and clients have on accessing their information or having the simplest experience. But I think education of how these tools can better their lives, how they are using them, what the security is, how to make sure they're managing their holistic financial picture is important, because right now there's a really splintered experience, which is great and cool and wonderful, right? You've got $50 in your Starbucks card. You've got all of these things sitting in Uber waiting for your next ride. But are you managing those appropriately to make sure that you as an individual or as a family are setting the right expectations for yourself financially? And so I think that's really where a lot of us can come together, and even how fintechs are coming into play too, to make sure these integrations are connectable and that we can see those big pictures in one spot, to make sure we're not being reckless about how these things are being used or where we're storing our money or looking at our future scope, right? Like we still need to plan for what happens next, and we still need to know where our finances sit. And the more we start splintering that experience, the harder that gets for our members and clients to navigate. So I really see that as the top tier of how this needs to come together, and making sure we're being responsible and supporting those members and clients in that journey, and still allowing that technology use to be a benefit to their life and not a detriment to their planning.
Wow. Thank you. I think that's an important note to kind of end on. I really do appreciate all of your perspectives, from the enabling technologies to the gateways and the use cases and the evolution, and most importantly, what it means to clients and the client experience. I think certainly as banks and financial institutions evolve, we are becoming much more attuned to the needs of our clients and leveraging technology to make that happen. There is a next session for the strategy group, part of embedded finance. So if you'll stay on the stage, we will be moving into We Are All FinTechs Now. So thank you all for joining us, and I hope you have a great afternoon.
Thanks, Matthew.
Thank you.
Thank you.